Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 7th, 2025, and we're diving into Rockwell Automation's latest earnings report for the second quarter of fiscal year 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Rockwell Automation, a leader in industrial automation and digital transformation, has just released their Q2 2025 results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Rockwell Automation reported sales of $2,001 million, which is a 6% decrease from the same quarter last year. John, can you explain the factors behind this decline?
Certainly. The decline in reported sales is primarily due to a 4% decrease in organic sales and a 2% negative impact from currency translation. Despite these challenges, Rockwell managed to achieve an adjusted EPS of $2.45, which is slightly down by 2% from last year, but still above the forecasted EPS of $0.29 by analysts.
That's interesting. How did the company manage to maintain profitability despite the sales decline?
Rockwell's focus on cost reduction and margin expansion actions played a crucial role. Their total segment operating margin increased to 20.4% from 19% a year ago, thanks to positive price-cost dynamics and operational efficiencies.
Segment performance. Let's delve into the performance of Rockwell's business segments. How did each segment fare this quarter?
The Intelligent Devices segment saw an 8% decline in sales, primarily due to lower volumes and currency impacts. However, the segment's operating margin improved to 17.7% from 16.5% last year. Software and Control remained relatively flat in terms of sales, but achieved a significant margin increase to 30.1% from 25.7%, driven by cost efficiencies. Lifecycle Services also experienced an 8% sales decline, with margins slightly decreasing due to higher compensation costs.
Cash flow and shareholder returns. How did Rockwell perform in terms of cash flow and shareholder returns this quarter?
Rockwell generated $199 million in operating cash flow, a significant increase from $120 million as last year. Free cash flow also rose to $171 million, up from $69 million. This improvement is largely due to lower tax payments. Additionally, Rockwell repurchased approximately 0.5 million shares for $129 million, demonstrating their commitment to returning value to shareholders.
Future outlook and guidance. Looking ahead, what guidance has Rockwell provided for the rest of fiscal 2025?
Rockwell has updated its sales growth guidance to a range of 4.5% to 1.5%, factoring in a 0.5% negative impact from currency. They've also raised their adjusted EPS guidance to between $9.20 and $10.20, reflecting strong execution and a focus on margin expansion. CEO Blake Moret emphasized the company's strategic positioning to capitalize on manufacturing and digital transformation investments in the U.S.
Key takeaways. In summary, Rockwell Automation has delivered a solid performance in Q2 2025 with strong profitability and cash flow despite sales challenges. Their strategic focus on cost management and margin expansion is evident in their results. Thank you, John, for your insights.
Thank you for having me. Rockwell's ability to navigate a dynamic environment and deliver value to shareholders is commendable.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Rockwell Automation's performance in the comments below.